Today's video is going to be very important because we are going to be talking about CPI. So we're going to do a CPI breakdown. We're also going to talk about some of the recent fundamental events. And then to end the video, we are going to go over these zones that I have marked off. I'm not going to do the top-down analysis in front of you guys, but I will show you guys why I have the zones marked off, why I have, 2,900 marked off, and etc. All right. So let's get into this. So the first thing we're going to go over is the fundamental review, which I know a lot of people have been curious to know why gold has been so bullish on all time frames. You can see gold on the daily time frame. Pretty much that's all you need to see. Like, this just been continuous upside on gold. And to summarize it into very basic definitions, let's just call it, over the past couple of weeks, we've seen a lot of uncertainty come into the market with all of the Trump tariffs. I believe I've talked about this before, but it's always good to refresh our memory. So we've had continuous Trump tariffs, continuous trade wars, we can call it, where you have Canada versus the US versus Mexico, US versus China, right? A lot of things are going on right now in the market. So all of that uncertainty has just been fueling a bunch of buyers into the market, which, as we're looking at here, is gold, right? So again, basic stuff. All of that, when we think about the definition of that, all we really got to understand is it brings uncertainty. And whenever we have uncertainty in the market, gold is going to turn more bullish. We've seen this when the previous war, like Hamas versus Israel, when all of that happened, all of that uncertainty came into the market, gold turned extremely bullish. Going back to stats, see the day that Hamas invaded Israel, and you're going to see literally the price action speaks for itself. If anything, we'll talk about that in another video. But again, just wanted to put that out there. And so that way we can now move on to the CPI breakdown. For the CPI breakdown, rather than just sitting here and spitting out some information, what I'm going to do is I'm going to show you guys an article so that way you can see from a more reliable source, if you want to call it. Reuters, in case some people don't trust me yet. We're going to go onto Reuters and we're going to use a small text here so that way we can understand what we may expect tomorrow from the CPI. Remember, CPI is tomorrow at 8:30 in the morning, and that is Eastern time. So let's read this text here. This is, again, from Reuters. If anything, I'll put the link in the description for this article so that way you can look at this yourself. This is going to talk about the tariff wars, all of the uncertainty that has been coming onto the market. And then it even gave us a little snippet here of what we could expect from the CPI and the PPI data. So let's go over this. I'm just going to read it out and then we'll explain it on the charts. So it says, if CPI and PPI data surprises on the downside, it may weigh on the dollar and inflate gold prices. So again, I'll translate that onto the market now. While an upside surprise could push US yields and strain gold, right? So again, this is important for us to understand. What does that even mean? How do we use that information to the market? What that small paragraph is basically trying to tell us is that if we do see inflation coming out lower than expected, we are most likely just going to continue seeing gold bulls, and we are going to most likely see more bears coming into dollar. Again, because if you do see that lower inflation report, then this is going to trigger the Fed to most likely cut rates sooner than expected. And again, that's going to be a negative for a dollar, which in turn, as the correlation here, would turn gold more bullish. And then it's just vice versa. If we actually see that inflation is higher than expected, then the Federal Reserve is not going to be expected to cut rates, maybe not as aggressively as some people might think. So with that being said, again, if inflation comes out higher, that could cause for a pullback on gold. But because gold has been so bullish, we're going to have to see a very, very strong report to really cause for that pullback to be present on gold. So it is possible tomorrow that if we do see inflation coming out higher than expected, we could see a nice technical pullback on gold, at least short term. And then on dollar, we can also see at least a short-term move towards the upside. But again, with all these uncertainties and tariff wars and all these geopolitical tensions, we do have to be careful for that, because if we just see continued geopolitical tensions and more tariff uncertainty, gold is most likely just going to continue pushing past all-time highs. So that's honestly the best and most simple cheat sheet that I can give you for trading gold tomorrow. And now let's go ahead and take a look at some of these zones, right? Because we already have the zones marked off. And so what we're going to see here is mainly on the 4 hour, to be honest. On the 4 hour, we have all-time highs basically at the 29.35s more or less. We did push a little bit higher than that, but this is where we created that resistance. The other, let me see here. Let's zoom in here. The other zone that I would be paying attention to is going to be this 2900. And you might be asking why I have 2900 marked off and maybe not like 2897s more or less, is because when we look at this on the 4 hour, we see that on the 4 hour, we broke above this area when we were creating these all-time highs, created a support, and then we just continued to push towards the upside. And if you can see this here on the 1 hour, you're gonna see it's very, very clean. So on the 1 hour, you can see very clean structure right here, very strong support area. And then again, let's go back to the 4 hour here. On the 4 hour, when you look at that 2900 area, you see price broke below this area, then broke back above that area, then broke back below that area. So it just got a little bit too messy for me to mark anything off. I'd rather look at this on the 1 hour and be able to confidently say to myself, you know what, we do have the 4 hour rejections, the 4 hour support, and we have this ton of candles and wicks rejecting and staying above that area, even around this zone as well. Even when we broke below that area, we kind of just like we're retesting into the zone, the 2900. So overall, this 2900 area, for me, in my opinion, is much stronger. So again, we'll be on the lookout for that 2900 area, because above 2900, I would want to just continue buying gold, in my opinion, because we're talking technicals now. In my opinion, if we see continued buyers above the 2900s, and if we can break above these previous highs here around the 2910s, we're most likely going to just continue to push towards the upside. And again, use that fundamental idea with the CPI report, like I talked about earlier, to help push that bias and to help you understand why gold might be breaking above this zone, and then just vice versa. Because we did break below that structure, and on the 1 hour, again, we did break that structure here, as you can see. Let's just mark it off. And this is the low, new high, price failing to make a new high, and then it actually starts to create this sort of structure here. That's why below the 2900s, I would expect for deeper sells to come in, possibly down into the 2880s, which is these previous highs right here, where we have to be on the lookout for any potential bounces. Because as you can see, most pullbacks on gold over the past couple of weeks have just been dips for buyers to continue pushing price towards the upside. You can see that when price pushed to this high right here, pullback, made another high. Slight consolidation, another high being made, pullback, another, which is basically a dip, and then before that, continuation. Another dip, another continuation. So you have to be on the lookout at this 2880 area. If we do reach this zone, be careful if we do see just continued buys there, following that overall structure that we're on right here, right? So again, this video a little bit different than the others because we didn't do the top-down analysis, but we have these zones marked off. Again, obviously, do your own research, do your own analysis, mark off whatever zones you feel are necessary to mark off. But I believe it's 2900s, 2910s more or less. I do have somewhat like of a price sensitivity around this area because you can see it on the lower time frames right here. Or let's extend this right here. You do have on the lower time frames, basically around this area, when price broke above, kind of retested that zone, continued to push, another retest, push, retest, push. Price here broke below that area, got a little bit messy around this zone, but overall, we were pretty much maintaining above that zone. You can see that when price stayed above this zone, you did have continued buys. So that's why I'm saying, if you do see price staying above the 2900s, just look out for continued buys, but anything below that, adapt to some short-term sells, at least down into the 2880s. So thank you guys for watching this video. I hope that clears up some of the doubts that some of you may have about economic data. It doesn't have to be too complicated, guys. You know, it can be simple as waiting for the data to be released, see if it came out above the numbers, see if it came out below the numbers, look at the impact on dollar, look at the impact on gold, and follow the price action. The markets are going to do the talking for you all the time. So I'll see you guys in the next video, and take care, everybody.